Very good morning to all of you. So we'll be continuing with the what we left yesterday. So we were actually discussing about the concept of why there is advanced tax deducted at source, and tax collected at source. So those are the things that we discussed, and we also discussed about few sections of TDS. So we started with 192 for salary. We also discussed about your withdrawal from provident fund, that is 192A, and then we went on with interest on securities, dividend, interest other than interest on securities. So we covered till non-resident sportsman, sports association or entertainer, so till 194E. So in today's session we are going to see after that 194E. So what is after 194E? We'll see three sections, which is probably just for your understanding. It is not much of importance as far as your examination is concerned. So typically it is 194E, which is about deposit with National Savings Scheme. It was a very old section that the concept of National Savings Scheme was there. So whatever is responsible to that, if some amount is withdrawn from that, then 10%, 10% of that is taxable, and it is not applicable if it is less than 2,500. And a specific exclusion. When you say exclusion, it is not non-applicability. So TDS provision of this provision is not applicable when the amount is actually paid to legal heirs. So these are the things that is specified in 194E, which is relating to withdrawal of deposits from National Savings Scheme. So NSS stands for National Savings Scheme. So it is a very old section. These days, in fact, there are deductions available for NSS earlier. Currently, the scheme is not active. So just for theoretical purposes, just know that any withdrawal from NSS will be subject to taxation, tax deduction at 10%. And if it is applicable only when the amount exceeds 2,500, and it is not applicable when the amount is actually paid to the legal heirs. So that is 194E. Then you have 194F. As far as 194F, you call it as repurchase. You call it as repurchase of this units. So repurchase of units, so which is typically your, just give me a second. Yeah. So it is repurchase of units. Stylus is not working. Just give me a second. Yeah, sorry. So with respect to this repurchase of unit, whatever we are calling as repurchase, what happens with respect to mutual fund or unit trust of India, that is UTI. So if there is any repurchase, so person responsible for paying and repurchase to any person. So typically there is a repurchase, which means it's already sold. Someone is actually repurchasing the shares. So whatever amount it is being paid, tax is deductible at 20%. So there is repurchase of shares. This repurchase of shares of mutual funds or unit trust of India, whatever amount is being paid for repurchase, it is taxable, tax deductible at 20%. And in both these cases, that is both 194E and 194F, in both the cases, the timing is payment basis. That is, it is applicable only on payment basis and not on credit basis. So in both these cases, it is applicable on payment basis. This is just know what this provision is about. Don't go much deeper into the provision. So the next provision that we'll be seeing is 194G. It is basically a commission. It is commission, but exclusively on commission on sale of lottery tickets. There are a couple of sections for commission alone. For example, you have 194D, which talks about insurance commission, and you have 194G, which talks about commission on sale of lottery tickets, and you have 194H, which talks about the other commission, every other commission apart from these two, that is your insurance commission and sale of lottery tickets, is covered in section 194H, which we'll be covering in the next slide. So as far as your exam goes, 194D is of kind of importance. 194G, you can just know what it is. Again, here it is about, it is also again repurchase or paying for that. But what are they paying for? It is a person is involved in stocking, distributing, purchasing, or selling lottery tickets. So you could be just storing, he could be distributing, he could be purchasing, or he could also be selling lottery tickets. So all these persons, that is whatever activity that they're doing, if they're receiving any commission for the activity that they're doing, if they're receiving any commission in whatever name it called, it could be commission, it could be even the gift money because of the lottery ticket. So that is also covered here. So all these things covered here will basically be 5% is there. And it is not applicable if it is up to 15,000. So if it's only the amount exceeding 15,000, the provision gets applicable. So this 194G is for sale of lottery tickets. Relating to lottery tickets, it could be commission, remuneration, or the prize money of the lottery ticket. There will be a deduction of 5% up to 15,000. So the person involved will be a stock person, he'll be stocking, he'll be distributing, he'll be purchasing, or he'll be selling lottery tickets for which he is receiving commission or payment, a commission or remuneration or a prize money, tax percentage, and if the amount is actually more than 15,000. So that's all the brief, probably a miscellaneous section we could call the 194EE, the 194F, and 194G. So we'll move on to the real section. That is, when I say real section, it is what is critical for your examination, which is 194H. So 194H. So this 194H is, as I told you, it is commission and brokerage. We were already discussing about various sections which are talking about commission. It is 194D. We said it's insurance commission. And we said 194G is for commission on sale of lottery tickets. And now you have 194H in this slide, which is every other commission, For example, you're using a broker for renting a premises, that brokerage is also covered here. Any selling commission that you're providing to someone, that is also covered here. So typically who is involved here? Sorry. So it involves any person, like in many other sections, that is 194A, 194C. This also has any person. It does not include individual HF, but there are specific individual HF which are included. Who are they? Whose EP? We saw this term last session, right? So it is immediately preceding previous year. So the EP turnover exceeds 1 crore in business or 50 lakhs in profession. Really sorry. So what is this 1 crore? Probably I could have told you yesterday itself. The limit that you're talking in 1 crore and 50 lakhs is typically the limit for tax audit. So in tax audit under section 44AB, the provision says if a business turnover is more than 1 crore, that is business greater than 1 crore or profession greater than 50 lakhs. So this provision is there in tax audit. But tax audit is actually not applicable when 95% of your income or expenditure is banking mode. That is through prescribed electronic modes. So if the income and expenditure more than 95% is through this mode, then what the limit becomes? The limit becomes 10 crores for business. For business, it becomes 10 crores. So which means up to 10 crores, there is no tax audit if 95% of your income and expenditure is through prescribed electronic modes. In that case, tax audit is not applicable. So what happens? Now the tax audit limit in a way becomes 10 crore. The earlier provision of most of the TDS provisions said individuals HUF for whom tax audit is applicable. But what has happened to 44AB, which discusses about tax audit? The provision is revised, is amended to say that tax audit is not applicable up to 10 crore. Then what happens as an effect? Since tax audit provision is amended, this TDS provision was also amended to say, here it is not 10 crore, here the limit is not 10 crore, here the limit is the existing old base limit of tax audit, that is here 1 crore and 50 lakh. So that is how this 1 crore and 50 lakh has been placed in the provision. So wherever we are reading this provision of immediately preceding previous year, where the turnover exceeds 1 crore or 50 lakhs, we are talking about based on the tax audit limit, the base tax audit limit. the base limit of tax audit. So that is what this numbers are. This turnover exceeding 1 crore and 50 lakhs is typically the base limit of tax audit. Please remember that. Don't try to mug up or just remember the provision. Know why it is structured in a manner it is actually structured. So try to understand the why. Try to understand why the provision is existing. What is the reason behind the provision? So that is what is it. So wherever you are reading this provision, where we are saying any person, including individual HUF, whose immediately preceding previous year turnover is more than 1 crore in case of business or 50 lakhs in case of profession, is because that is the base tax audit limit. So that's the thing. So that's what the payer is. This is some additional information that I wanted to give you wherever we are using this clause of this turnover limit. So that's where I wanted to explain you why there is this limit being specified in the provisions. Okay. Now coming back to 194H, we have understood the payer. Now we have to understood the payee. The payee is any resident. So any resident. Most of the section, as I told you, but for few sections, as far as your intermediate is concerned, the only section which talks about non-resident would be 194E. We are not going to have any other tax audit sections, any other non-resident sections for which TDS is deductible in your intermediate syllabus. You are not going to have it. All that will be only the final. So as far as your intermediate goes, the only section which preferably talks about non-resident is 194E. Every other case, it is mostly resident. So wherever it is non-resident, probably I'll stress it out. So the payee is resident. So the payee is a resident. What is he receiving? So the payment made by the payer to the payee is for the purpose of commission, and it shall be other than insurance commission, also other than the commission on sale of lottery tickets, because both are why are they excluding? Why are they excluding insurance commission? Why are they excluding commission on sale of lottery tickets? Because you have separate sections for that. So you have 194D. You have 194D for this. Then why should you include it here? So moment there is a section which is already there for particularly for a specific clause, why do you repeat it? So that's the very purpose. So since any income by way of commission other than insurance commission, you need not even know why it is, because there is already a separate section called 194D to cover insurance commission, hence excluded in 194. So you're not trying to mug up, you're trying to remember, yes, of course, in this commission, you will not have insurance commission, because there is already a section called 194D, which is already covered by us in the last session. So that's what it is. Now it is credit or payment, whichever is yearly. Credit or payment, whichever is yearly is there. What is the tax rate? It is 5%. As I told you, predominantly the tax rate will be 10% or 5% in almost all the cases. Very few, the next other rates could be 1% or 2%. So the profit, generally the rates that you have is 1, 2, 5, and 10. So this will be generally your TDS rate. I'll write it this side if it is actually hiding. Yeah. So 1, 2, 5, 10 will be typically the TDS rates. Okay. So here you have 5%, and it is not applicable up to 15,000. So up to 15,000, the TDS is actually not applicable. So only when it exceeds 15,000, it is actually applicable. What are the specific exclusions provided in that? There are few other exclusions here, but as far as your intermediate goes, these are the only things that are covered. So whatever is paid to BSNL MTL to PSO franchisee. I don't know how many of you actually listening this class would know this concept of PCO. It is actually called as public calling booth. Okay, in those days when you don't have these mobile phones and other things, and probably you don't have a phone at your home also, when you go out, you used to see this booth which exists outside where you go and make calls, right? So there are only two companies which is actually providing that. It was BSNL and MTNL. Only then companies like Airtel all came up with the landline numbers. So otherwise, the landline was only restricted to BSNL and MTNL. And in fact, in southern India, it is typically mostly it is only BSNL. So what happens here is they get franchisee to run this PCO booth. So this PCO booth is typically like a self-help business. That is, persons who are actually finding it difficult to do something, probably disabled persons or persons who require some support, financial support. Government said you can run PCO franchisee. So they helped them run the PCO franchisee. So this BSNL or MTNL used to pay them for the number of calls that is being made from that franchisee. So it is actually in term of commission only. But the government said, why do unnecessarily tax them? Because we are only trying to help them, trying to groom them, being a businessman. So let's not deduct any TDS. So BSNL or MTNL paying to this PCO booth, the so-called PCO booth, was actually existed long before. That for such booth, whatever is being paid by BSNL and MTNL, in case if there is a PCO booth at this point in time and they're receiving a commission fee from this BSNL or MTNL, it is not tax deductible. So that is an old business. If it exists today, it is not tax deductible. And the next one is, of course, it is not applicable for professional services specified in 44A. Why? The most important question or the most preferred question to me is always this why, because only that will give you an understanding of what you're actually studying. So why are you excluding professional services? Because you have a separate section 194J. So since there is a separate section, you are not covering it under this section. And then you have payments made by television channel newspaper companies to the advertising agencies. Why is there an exclusion for booking of procuring or canvassing advertisements? Now, if you actually see these days, if you actually see at least the first 2 to 3 pages are only advertisements, right? And whichever page you're opening in Times of India or most of the newspapers, probably the first and second sheet is always an advertisement, a big, huge advertisement for properties or whatever it is, right? So these advertisements is typically, there are agencies which procures advertisements. So whatever the newspaper is paying to this advertising agency for this purpose of advertisement. You have advertisements for various things, like you have real estate advertisements, you have rental advertisements, you have matrimonial advertisements. So you have so many advertisements. So whatever advertisement is procured by this advertising agency, for that whatever Times of India is paying. So the newspaper paying to the advertising agency for procuring or canvassing advertisement is typically not commission. So it is not classified under 194H. So there was a circular in 2016 issued to say that this shall not be classified under 194H. If they are doing any other service, if that advertisement agency is doing any other service other than procuring advertisement, let's say they're canvassing a celebrity to appear in the paper, to write an article, to provide an interview, that is not covered here. What is covered is only procuring or canvassing of advertisement. Nothing else is covered. So this procuring or canvassing of advertisement is not tax deductible under section 194H. So that is what this provision is. So payment made to television channels or newspaper channels or by newspaper to advertising agency for procuring or canvassing advertisements. So this is not tax deductible under section 194H. Okay, clear? So that's all 194H is. We'll probably try to understand with this provision. Now, Moon, a television channel, is actually making a payment of 50 lakhs for telecasting as per this. This is actually not what 194H. It will be 194C. Okay. So it's basically just to refresh in the earlier class, we'll see this exercise of this 194C. So what did we say in 194C? We said whatever is being paid, if the design, the television channel is providing the content, is also getting the streaming rights in that case. So if content plus streaming rights, then 194C is applicable. So that's what we said, right? So here it says a television made payment of 50 lakhs to a production house for production program for telecasting as per the specification given by the channel, which means the content is provided by the channel. The copyright of the program is also transferred to the Moon TV, which means the streaming rights. When I say streaming right, I'm actually trying to literally mean the word copyright only. So they've actually given the rights to this transfer to Moon TV. So whatever is that will be liable for tax deduction, will be liable for tax deduction under section 194C. So also examine whether the provision would apply if moved for acquisition of telecasting rates. So they're only acquiring telecasting rates and it is already produced. We saw the example of Big Boss and all yesterday. So if the content is already produced, only the streaming rights, the television right is procured, it is not 194C. So in this case, it is 194C. In this case, it is not 194C. So that's the thing. So I'll just answer a couple of questions if there is anything on 194H. Okay, some of you have questioned about the suspense. So in your book material, when you're reading, it will have a word called credit or payment, whichever you're here, and there will be a para about suspense account. The point is, when you actually say the word credit, okay, when you're actually saying the word credit in the books of account, what you are trying to say is, let's say there is an expenditure. Let's talk about a contract itself. You have given a work. So there is something work given. So you're purchasing the goods from that. So now you debit the party, right? So the party is, let's say A Private Limited. So the party is A Private Limited. So the entry would be when you're purchasing, it will be purchase account debit to A Private Limited, right? So let's say this transaction falls under 194C. Now this is called crediting, right? Crediting your books of account. In case we are not crediting, you are directly paying. What would have been the entry? The entry would have been purchase account debit to bank account. In narration, you will write paid to A Private Limited, right? So here, whatever we are saying here is payment. So the account says, the provision says credit or payment, whichever is earlier. So if you are crediting first, deduct it at that time. If you are actually paying first, either you are paying advance or directly paying, then at that time itself you book the thing. So that is what there. So let's say you first paid advance. What would have been the entry? You would have first paid the entry of bank account to, you would have paid A Private Limited to bank. Okay, you would have paid some amount and said it is advance. And then you will pass this entry, correct? So if you are paying first, so in payment or credit, whichever is earlier. Now there is a situation, what happens is you don't credit or payment, but you book something called suspense account. Let's say you're actually not booking into the account. So you're calling some account called suspense account, saying I'll treat it later. Currently, I'll keep it in suspense account. I'll put it later. Then the provision says, at that time, whenever you are booking to suspense, TDS arises, the due of TDS arises. So that's why your material will have an additional para of calling suspense account. So I am not explaining it in each of the slides, because whenever I say credit or payment, the credit need not be the party alone. It could be to any other credit which is relating to the transaction, which is relating to that party. So that's why the concept of suspense account is there in the book material. So let's assume wherever I'm saying credit or payment, the credit could also be to a suspense account, which is also applicable if it is related to the transaction. So that's what it is. Okay, what is franchisee? Is basically, let's say, a trader who only gets commission of dealing in that product. So basically, you get the rights to do the business. Let's say you have a petrol bunk. Okay, you have Bharat Petroleum. Bharat Petroleum says, I cannot run the business everywhere. I'll give you franchisee. I'll let you run the Bharat Petroleum pump. Whatever you're selling, I'll provide you a commission on sales that you're making. So that is actually franchisee. Canvassing generally means what? You're convincing someone to provide an advertisement. It's like marketing. So if the marketing is purely for advertisement reasons, then tax is not deductible under 194H. Whether a property dealers falls under 194H, yes, that's why I said when you're actually finding a broker for renting a property or buying a property, it is applicable. See, basically, the money is, Ashish, you have asked me a question about how this advertisement works. Let's say now Zomato, okay, we'll take Zomato, needs to advertise in Times of India. What generally happens is either Zomato can directly contact Times of India and sell the advertisement, or what happens is there will be a dealer in between. So what happens is Zomato will contact A. A will sell, I have got you an advertisement. So A will act on behalf of Times of India. Now for this, Times of India will remunerate a commission, let's say a commission. So this commission is what the 194H says, you need not deduct TDS. So it's typically Zomato will pay A, whatever is the advertisement charges, A will pay to Times of India. But for getting this advertisement, for this transaction is called canvassing. That is, A is marketing to advertise in Times of India. So Zomato will advertise it in the through A. It will reach Times of India. So that is what you call it as commission for that. So that is why we said the commission paid by Times of India or any newspaper or television channel to an advertisement agency for procuring or canvassing is not applicable under 194H. So we'll move on to the next section, that is 194I. This is also a little important section. So here again, I'm not going to explain you about this any person. So the payer is basically whatever we have been discussing in 194A, 194C, 194H, all those things. Okay. Now payee also, it is common. It's a resident. Now for what purpose? For rent. What do you mean by rent? Rent basically includes not just monthly rental. It could be lease, it could be sublease, or any form of tenancy agreement. So it is an agreement to use a particular asset, right to use of an asset, so for which you are paying rental charges. Now, what kind of asset is covered? As basically plant, machinery, equipment, land, building, furniture, and fittings. I'll just come back to that a little later. So the time of deduction has to be credit or payment, whichever is earlier. When I say this, what also it's included? When I say credit or payment, what is also included? Suspense account. So there will be a para in your material. I'm not taking through that para here because it is self-explanatory. That is, when I say credit includes the suspense account. That's why I have not included separately. Okay. What is the rate of tax deduction? For machinery, plant, equipment. So for MPE, it is 2%. It is 2%. For land building. So for land and building, furniture and fittings, it is 10%. So I've always found this interesting. Why is furniture and fitting included part of land building and not part of other assets? Technically, land and building is an independent asset, right? And furniture fittings, it's kind of equipment or plant and machinery only that you're talking about. So I used to think, why is this part of this land building and not part of plant and machinery? If you actually see, most of the corporates which is renting out a building, it will be inbuilt with the infrastructure. What infrastructure? It will have cabins, it will have chairs, it will have tables and everything, right? The cabin, everything will be there already there in the infrastructure. That is what you're calling as furniture and fittings. And this section is purely only for business purposes. It is not your home rental, right? It is not your home rental. So since it is not home rental, when you're basically finding a rented building for a corporate, it might come with the infrastructure. You see these IT companies and everything having a huge infrastructure. Not necessarily they have provided, spent on that infrastructure. It might be that building itself has that infrastructure. So what happens? It is part of my building. I cannot segregate my rental to how much is towards land and building, how much is towards furniture and fittings, because what I'm letting it out is wholesome, is complete package. What package? it has land, it has building, it has furniture, it has fittings. So this is what you're calling as land, building, furniture, fittings. So for that, it is 10%. For other assets, that is your PME, that is plant and machinery and equipments. So for that, it is 2%. So that is what it is there. So basically, for land, building, furniture, it is 10%. For machinery, plant and equipment, it is 2%. So that's the rate. So these are the assets that we are calling as rental. So anything else not listed in this category is not an asset. So typically. So what is the limit? It is, let's say, 2,40,000 per annum. That is nothing like close to 20,000 per month. So if your aggregate does not exceed 2,40,000, when you say aggregate, you are saying in total throughout the year, if you are paying more than 2.4 lakhs, TDS under 194I is applicable. There are specific exclusions, like in many other sections. So what are the exclusions? The rent to a business trust being REIT. So what is REIT? It is Real Estate Investment Trust. What is this REIT? For time being, you will understand this in final. So for time being, just understand REIT is a trust which is in the business of, or I'll use the word activity. REIT is a trust which is in the activity of renting properties, dealing in real estate. So this is a real estate investment trust. So if rent is being paid to a REIT in respect of real estate owned by such trust, then TDS need not be deducted. So whatever is being paid to the REIT is not tax deductible. And payment paid on cooling charges. In what section we saw this already? We saw in 194C, where we said payment made to cooling charges is tax deductible under section 194C and not under 194I. So it comes here. So you cannot say, see, there is a warehouse, I have cooling storage, I am paying for storage, so it is rental. So that's the assumption, right? I am paying for storage, so it is rental. But court said, and then there was circular also issued saying that the cooling charges is not only for the cooling storage alone, it also provides other facilities. So it falls under 194C and not under 194I. Then you have payment of lump sum premium or one-time upfront lease charges. So if there is any one-time payment made for this real estate and other things, then the upfront lease charges, it said it is not, it is not covered under 194I. So whatever is there as one-time upfront lease charges. So there is a small thing here. So it is typically whatever is refundable, the deposits, the rental deposit and other things, it is not actually tax deductible. So one-time upfront lease charges is actually not tax deductible. And then you have passenger service fee. Similarly, in airline, just imagine an airport. You have flights coming and landing in the track. It stays there for a few hours before it drops the passengers, picks the other passengers, and then takes the trip. So this few hours in which it is parked, let's say 5 hours, 6 hours, or whatever it is actually parked, for this airport actually collects something called passenger service fee, which includes the parking charges and facilities provided by airport, like whatever relating to weather reports or where to land, when to land, and all those things, right, which guides the flight. So since there are additional services, parking charges alone is not the only benefit that they are getting. They are getting various other benefits. So it is not purely rental. So it is not applicable. So 194I is not applicable on passenger service fee with respect to an airport operator. So this was also provided through a circular. What else you need to understand in the 194I? TDS is applicable whether or not asset is owned by the payee. Now the point here is, just go back to our first session, which we spoke about clubbing. We said asset is owned by the assessee. Income is being received by spouse, right? So income is received by spouse or son or whatever. Income is received from someone, but asset is held by another's name. So whenever rent is being paid to a particular person, even if they are not the owner of the asset, they might be chargeable. So typically, the TDS will be deductible against the person to whom is in charge of that income, clubbing provision comes later. But as far as TDS comes, whenever you are paying a rental, you need not see whether the person is the owner of that property. We need to see whether they are rightfully earning that rental. Whatever rent they are earning is rightful, whether they are legally, legitimately claiming the rental. That alone needs to be seen. So they need not be the owner of the asset. So then you have TDS to be deducted without including GST. So there is this always confusion whether TDS should be on GST or before GST. That is, it has to be before the goods and service tax in your invoice. So typically, if you have a rent of, let's say, rent of 1 lakh, okay, GST of 18,000. So your rental will be 1,18,000. TDS will be 10,000. That is 1 lakh into 10%. So you need to exclude this for the purpose of TDS purposes, provided it is separately indicated. It is separately indicated. If it is not separately indicated, then on the whole money. So the point here explained was, whatever rental is being paid, TDS is being deducted on rental, is excluding goods and service taxes. But if it is not indicated separately, then you'll have to do it on the whole. So to leave out GST, it has to be indicated separately. Why are you not deducting on GST? GST is not your income, right? So if you're going through indirect taxes, what happens? This 18 I deposit to government, right? So this is not my income. So this is not income. So income tax says don't deduct TDS because it is not your income. Whatever income is only this 1 lakh. So this only is your income. So TDS is on income alone. So deduct it only on this 1 lakh. So that's what the provision says. Okay. So that is 194I. So next section that we'll be seeing is as far as this depreciation on leased assets, that's a different story. So when you say leased assets, there are two categories. One is, let's take, you're taking something like you're hiring in EMI and other thing. So in that cases, what happens is you are only actually owning the asset, but technically they have the right to take away your property. So that's where it is. In other case, you're just using the property and going to give it back to them at a later point in time. So the depreciation rules changes according to that. I'm not going to explain that because it's purely accounting. So just see, depreciation is not always to the lessee. In some cases, it is to the lessor also, but that's a different issue altogether. As far as your TDS goes, it is applicable. TDS needs to be deducted when you are paying rental to this particular person, to the owner of the property or the owner of the income. So that's what it is. About talking about this GST, including all taxes and then applying GST, it is other taxes. It is not income tax, because income tax is taxed later point in time on your profits, not your income. Let's say there is some other taxes like customs or something of that kind. That's what they specify. So GST is on income. If there are any other taxes on that that you need to pay, that is also included. But for income tax purposes, we are talking about tax deduction. It is on income. It is on income. So you restrict it to the income alone. So whatever GST says, including taxes, it's not this tax that they are referring to it, because this is a income tax which is on profits, not on your income that you're charging. So that is a different thing. Okay, so we'll move on to the next section, that is 194IA. All 194I sections is relating to properties. Okay, it is relating to properties. So now properties. Okay. As far as this 194IA goes, it says payment of certain transfer of immovable property other than the agriculture land. So what exactly it is? You are selling a property, or let's say you are buying a property. You are buying a property, which is not an agriculture land. So for this purchase of this property, there is a TDS provision. So what does the provision says? It says any person. So any person who's buying the property, if they're buying the property from resident seller, so here also it is resident. Any person from a resident seller, TDS is applicable if there is a transfer of any immovable property other than rural agriculture land. So they are not just saying agriculture land, they're only referring to rural agriculture land. If you actually see what is rural agriculture land, you would have studied that 8-kilometer radius in exempt income chapter when you would have seen. So that radius, within that radius, if it's eligible to be called as a rural agriculture land, then it is not an asset itself. It is not at all an asset. So TDS is not applicable on that asset. So for any other immovable property, when you say immovable property, what all could be immovable property? Immovable property generally refers which cannot be moved. Of course, today you have technology to move buildings also, but still immovable is considered to be the one which cannot be frequently moved. We'll keep it that way. So you have land, you have building, okay? Now, this is independently an asset. This is independently an asset, but where can a building be? It can always be on land. So when you say building, it is a building on that land, right? Okay, it's building on that land. So when you say land, it could be land or building with land. So that's what you're actually calling it as immovable property. Now, this immovable property, whichever is being sold, is tax deductible at the credit or payment, whichever is earlier. And the tax deductible is 1%. Tax deductible is 1%. It is not applicable if the consideration is less than 50 lakhs. That is the purchase value of the property. So if that property is less than 50 lakhs, then it is not covered. It is also not applicable for compulsory acquisition because there is a separate section for 194 LA which discusses about compulsory acquisition. What is compulsory acquisition? I'll probably explain it here itself rather than waiting till 194 LA. Compulsory acquisition is basically, there are various metro connections being constructed, right? Let's say as per the proposed government plan, the metros needs a particular land which is occupied by a private property. A particular person owns that land on which there is proposal of constructing a metro to be constructed. Now government says, see, I'll give you whatever the market value is. I'll give you that money you give me the land. So it is a compulsory acquisition. Government says you will have to give it to me. You don't have an option. So for that compulsory acquisition, there is a separate section which is discussed in 194 LA. As far as here it goes, it is only relating to transfer of immovable property other than this compulsory acquisition. And now when we are talking about this TDS, probably this is the first portion where I need to explain you this. You have this concept of what? You have PAN, right? You have TAN. So PAN is generally what you would have studied in income tax, where you obtain a PAN on which is what will be used for filing your return, everything this. For TDS purposes, for this TDS and TCS purposes, you will have this TAN. So that is called tax account number. So you need to obtain a separate tax account number for all the deductions that we have been talking right now, the 194C, 194I, 194H, whatever we have seen till now, you need a separate tax account number to collect taxes. So only then you are eligible to deduct or collect taxes. So that is the base number for collection of account number. Why a TAN separately and all, probably if required, I'll explain a little later. As of now, there are two different unique numbers. One is PAN, one is TAN. This TAN is what is required for tax deduction. But for this provision of 194 IA, the provision says that it need not be required. That is, it need not be required to have a TAN. It is not required to have a TAN. So you can pay whatever TDS that you are saying, you can pay it with your PAN itself. You need not obtain a separate TAN. So that is the one thing that we need to understand. The second thing is, when you say consideration not more than 50 lakhs, less than 50 lakhs, what is consideration? Because consideration includes all charges incidental to transfer of property. So whatever you are paying along with that land and building, whatever you are buying is only land and building. But let's take apartments, right? In apartments, you have a club facility, you are given covered car parking, you are given a facility of what, full-time electricity or whatever it is. So any fee that is being paid for the incidental benefits that you're getting, that is also included. So when you say consideration, it's not only the value of land and building, it also includes the club membership, the car parking charges, the electricity and water charges, or any fee or whatever manner paid to that buying that apartment. So that is also included. So whatever is included is all these things. So these things is what we called as consideration. We'll just understand this with a small problem. So Mr. X sold his house property in Bangalore. So he has sold an house property and he has also sold a rural agriculture land for 60 lakhs and 15 lakhs respectively. So what is the number? 60. 15 we can actually probably ignore because what? Because it is not applicable because it is a rural agriculture land. So primarily our question is going to be only on this house property. He has sold it to Mr. Y on 1st August 2021. He has purchased the house property. He has purchased the house property and the land in the year 2020. So it was actually purchased in 2020 for 40 lakhs and 10 lakhs respectively. Of course, this is not required. So as we were talking about, a question could have a number which is confusing or giving extra information. Anything related to rural agriculture land is actually irrelevant because first itself, moment you read rural agriculture land, you know that it is actually not tax deductible or it is not taxable at all. The stamp duty value on the date of transfer is 85 lakhs. 85 lakhs. And again, this 20 lakhs is only confusing because whatever is the situation, whatever chapter you take, capital gain, income from other sources, whatever chapter you take, rural agriculture land is not an asset. So again, here also, I'll just eliminate this, not required. Examine the tax implication in the hands of X and Y. Now, there are few things that we need to understand. So one is TDS. TDS, what does TDS say? Whenever a consideration exceeds 50 lakhs, 1% has to be deducted on the whole amount. So moment it is exceeds, it's on the whole amount only. So TDS must be deducted on 60 lakhs, right? TDS must be deducted on 60 lakhs. So for Mr. X, we need to understand few things. For example, we need to calculate the capital gain because it says tax implications. So you'll have to say for the tax calculation purposes, what is the value that has to be taken? What is the value that has to be taken? There is a provision which says when your stamp duty value, you'd have already studied that when your stamp duty value is greater than 110% of the sale consideration, is greater than 110% of the sale consideration, then stamp duty value becomes your sale consideration. So here in our example, in our exercise, what is the sale consideration? Sale consideration is 60 lakhs. What is the stamp duty value? 85 lakhs. Right? 85 lakhs. So what is 110%? It is 66 lakhs. Right? So what becomes the sale consideration? The stamp duty value. So the capital gain, that is short-term capital gain, because the property was purchased in 2020 and sold in 2021. So it's a what? It's a short-term capital gain. So what will be the short-term capital gain? 85 lakhs minus 40 lakhs. So 45 lakhs will be the short-term capital gain in the hands of Mr. X. So that is what Mr. X is about, right? So that is what is considered. Now, as far as Mr. Y goes, what should you do? Mr. Y goes, Mr. Y, with respect to income from other sources. Income from other sources, 56 says, if you have purchased any property where the difference between same provision, okay, whatever you discussed in capital gain only, that is stamp duty value greater than 110% of your sale consideration. So this is the same thing. But what would have changed is they would have said stamp duty value minus cost. Cost is equal to, cost is greater than 10% of cost. This both are same. Whatever you are seeing here, both are same. Just that capital gain uses the word sale consideration, whereas in income from other sources, they use this concept of cost. So stamp duty value minus cost is more than 10% of cost. Then this difference is an income. This difference is an income from other sources. So this is given in 56. Now here what happens? Whatever the difference, so the difference between IFOs will be difference between 85 minus 60. So this 25 lakhs will be an income in the hands of Mr. Y. And apart from this, what are TDS consequences? So for TDS consequences, since it is a immovable property, which is being purchased, he has to deduct how much? 1%. So 60 lakhs into 1%. How much is it? It is what, 60,000, right? So 60,000 should be paid to government on behalf of Mr. X. For this, he need not obtain TAN, right? So this is the provision. So typically, one good thing probably will additionally understand, which I did not tell you in that slide, will be that this 10%, whatever that is, the consideration that you're talking is not stamp duty value. So 1% on consideration, not stamp duty value. So it is not on stamp duty value. So it is on consideration. So though for every other calculations for under section 50C or under section 56, you are taking the stamp duty value also into consideration. For purpose of TDS, it is only consideration. Clear? So we'll move on to next section. Next section is 194IB. It is basically, this is also for rental, that is similar to 194I, but this is to persons who are not covered under 194I. So for rental payments, for persons who are not covered under 194I, who are they? They are individual or HUF whose turnover is less than 1 crore in business or less than 50 lakhs in profession. So it is less than or equal to 1 crore in the immediately preceding previous year. So the EP turnover is less than or equal. So persons who are not covered under 194I. So 194I, they are not covered. This gets applied. That's what it is. So it is applicable to a person. That is when a rent is being paid to resident. Rent of land or building includes lease, sublease, whatever. So when you say land or building, it includes both land and building also. When you say building, it includes the land. When should you deduct TDS? Last month of the previous year, that is March of that financial year, or in case if they are vacating the property, the last month in which they occupied the property. So this is what it is there, whichever is earlier. So either March or the month in which they are actually vacating. What is the TDS needs to be deducted? 5%. It is not applicable if the rent payment is up to 50,000 per month. So only if it is crossing 50,000 per month, TDS gets applicable. For this also, you need not obtain TAN. This provision, I'll just briefly explain here a little later. So probably we'll try to understand this. Before that, I'll just go and explain you what happened. So as we said, the provision says, I stay from April to March. April to March. So I stay from April to March. So this period, whatever period I'm talking about, that is April 22 to March 23. This rental, TDS at 5% in March 2023. If I'm vacating, let's say I'm staying from April 22 to December 22, then TDS at 5% in December 22. December 22. So this is what it says. So whichever is earlier. So March or the month in which you lastly occupied the property. So that was provided here. That is what is provided here, which is scaled as whichever is earlier. So it is only applicable if the rental is more than 50,000. What is 206AA and 206AB? We'll discuss this later at this point, later in this session itself. For time being, I'll explain what it is. 206AA is where TDS must be deducted, but payee does not have PAN. Okay, does not have PAN. So in that case, the provision says, the section says, deduct rate specified or 20%, whichever is higher. So what is the rate specified here? 5%. What is the rate specified in 206AA? So since 20% is greater, TDS, if no PAN, if the owner of the property does not have a PAN, then when I'm paying rental, I'll have to deduct 20%. But now the provision says, similarly 206AB, AB is non-filing return for last 2 assessment years. Okay, if you have not filed for the last 2 assessment year, the rate or twice or 5%, whichever is higher is the provision. So now what is the rate here? 5. Okay, what will be the rate twice? Will be 10, and this will be 5. So which is higher? The higher will be this 10%, right? So now the applicable rate will be 10%. So this is what the provision says. If that is the case, then the provision says the maximum TDS can be 1 month rental. Maximum TDS can be 1 month rental. If you wanted to explain me why, let's say I'm paying 60,000 rental. Okay, 12 months. What is the rental? 7,20,000. I need to deduct it in the last month of tenancy or last month of the year, or when I'm vacating. Let's say I was there for the whole year. So in March 22, I will have to deduct TDS. How much to deduct? 5% if PAN is provided, else I'll have to deduct 20%. Now let's assume there is no PAN. The owner does not have a PAN. What happens? I need to deduct 20%. What will be my total thing? My total thing will be what? 1,40,000 plus 4,000, is it? 1,44,000. So this 1,44,000 is what I need to deduct TDS because the owner has not provided PAN. But is this okay? Because now I'll have to pay the owner only 60,000. Pay owner in March 22 is only 60,000. So if I need to pay TDS, I'll have to collect from owner this difference, that is 84,000. Will owner give me this 84,000? Say, okay, I'm very happy that government is collecting 20% because I don't have a PAN. Please keep 84,000, pay 1,44,000 to the government. Will any owner say this? It's not possible, right? So government says when this 1,44,000 is greater than 60,000, ignore this. This will be your, ignore this, keep this as your TDS. So restrict your TDS to 1 month rental where your TDS payable is more than 1 month rental. When can it be more than 1 rental? When your total payment is more than 100% of rental. So it is typically when it is under section 206AA or 206AB. Similarly, in AB, it is 10%, right? So this is the reason why they're restricting to last month alone. The reason why they're restricting to last month rental is because of reducing the hindrance. The tenant cannot collect money back from the owner. To avoid that, they are saying you hold on to it. So that is why it's there. We'll see into the problem to get a better understanding. So rent is actually 55,000 per month. Is occupying from June 2021. Is he required to deduct tax at source? So the rental payment is basically rent. So rent is how much from June 21 to March 22. How many months? It will be what, 10 months, right? 10 months. So total rent will be 55,000 into 10, which is 5,50,000. So this will be the total rent. They want us to understand what will be the tax deduction. So we'll have to say tax will be deducted. TDS will be 5% on 5,50,000. So we'll put it as 5 into 5,50,000. So 55,000, 27,500. So in March 21, March 22, Mr. X, March 22 will pay to owner 55,000 minus 27,500. So this is what he'll actually pay. He will pay this amount to owner, that is how much? 27,500. And to government X will pay 27,500 as TDS. TDS under section 194 IB. So this is what will happen as far as this X is concerned. Right? Now what does it say? If so, also compute the amount of tax. We have already computed. Would your answer change if X vacated the premises on December 21? So now what happens when he is actually vacating? We'll repeat this. Total rent will be 55,000. In this case, it will not be 10 months. It will be how many months? 7 months, right? So 350 plus 35, 3,85,000. So TDS will be 3,85,000 into 5%. That is 19,250. Correct? Please correct me the numbers if I'm wrong. Okay, so I'm just doing it mentally. So please correct me if the numbers are wrong. So 3,85,000 into 5% will be 19,250. So now this 1950, when should he pay? When he's paying December 21 rental, as we told to the owner, he will pay 55,000 minus 19,250. So that will be 35,750. And to the government, it will be how much? To the government, it will be 19,250. So this is if it is in December. Now the question says, what happens if Y does not provide PAN to X? So now in this case, if PAN is not provided, 20% of 5,50,000 will be 1,10,000. Correct? 1,10,000. So it is restricted to 55,000. So X will pay to owner nothing, nil, because the entire 55,000 becomes TDS. To government, he will pay 55,000. Correct? Because 1,10,000 is greater than 55,000. So TDS is restricted to 55,000. So that's what it is about. In this case, what happens? In the second case, what happens? In this case, it is 3,85,000. That is 20% of 3,85,000 will be how much? 38,500. 77,000. 77,000 is greater than 55,000. So again, here also X will pay to owner nil, will pay to government 55,000. 55,000. So the answer will remain same in both the situations because 20% of the total rental paid is more than 1 month rental. So the TDS is restricted to 1 month rental. So that is 194 IB. So we'll just see some questions and then I'll proceed with the next thing. Jamil, I guess 194C, we already explained it last time. So typically what happens, if I give the material plus design, 194C is applicable. If I'm not giving material, I'm only giving the design, 194C is not applicable. So please remember, material plus design, content plus right, material plus design, content plus right. I'll just specify one last time on this. For 194C, material plus design, content plus rights, that is your streaming rights, broadcasting rights. So on this 194C is applicable. Okay. Similarly, material, sorry, I'll put it this way. Design alone, rights alone, then 194C is not applicable. So that's what it is about. So maybe you can take it again. Abhay, how can someone deduct TDS when he's not a TAN? That's what I'm saying. Probably we'll understand the procedure a little later. You'll pay the TDS through your PAN. You'll pay the TDS through your PAN. Probably I'll explain PAN and TAN now itself, or I'll answer some other question. Please set distinction on 1% of the rental TDS. Yeah. Whether 194I includes both commercial and residential? Yes, it includes. But if you actually see, it only talks about individual HF whose turnover is less. So even if they're doing a business, they'll probably be doing a very small business. But it is both for commercial and residential. So both are there. Okay, now we'll understand the difference between PAN and TAN. Some of you have been questioning about PAN, TAN, and how can it be paid. Now we'll understand the process, okay? A short process. It is not part of your material, so just for your understanding. So you have PAN, right? You report income, pay tax, file return. All this happens through your PAN. And what is the facility of PAN? One PAN per person. So you might have different locations. You might have like 10 branches across India, but still you will have one PAN. Still you will have one PAN. That is PAN, okay? TAN is tax account number. It is for TDS purposes. It is for TDS and TCS purposes. One TAN per state. So if you have a location in Tamil Nadu, you will have a TAN. If you have a location in Maharashtra, you will have a different TAN. So the TAN will change different to states. So for every state, you need to obtain a TAN. Only under the TAN, you must deduct TDS. Okay, that is where you need to deduct TDS. Now what happens? Now let's say A is into business. A pays to B for 194C, to C for 194H, and D also for 194C. Okay. Now what A does is, let's say this is 100, this is 20, this is 30. So A will deposit to government 150 using TAN. So A will deposit 150 to government using the TAN. Now what happens is, periodically, the purpose of paying this TDS is to give credit. So now this 150 is nothing but these three, right? So now they'll have to get credit. Both this A, B, C, and D has to get credit of whatever they've done. So periodically what will happen? A will file TDS return. It will say A PAN 194C 100. B their PAN 194, what section did I say? 194H. 194H 20, right? C, what PAN they have? 194C 30. So I'll say this is why I paid 150 nil. So now A will file this return using TAN, and report this. Now B will credit. So both B, C, D, right? So only now they will get tax credit, TDS credit. So TAN will be used to deduct, pay, and report to the government. So deduct, pay, and report. So this is what the role of TAN is. But for certain payments, which is basically for small individuals who are not into business or who are doing small business, obtaining a TAN, filing this return is all a huge process. It's a difficult process. So to avoid that, in few sections, like what we saw in 194 IB and 194 IA, TDS can be deducted without using TAN, which means it is one-on-one. In those sections, it is one-on-one. So buyer on seller, it is not multiple payments like what we see here, B, C, D, it is one-on-one. So B will deduct for C, B will report to C. So in this case, it is PAN with PAN. So no TAN. That is why for certain sections, you are not requiring TAN. So that is about, and about 206A and B. Yeah. See, when payee does not have a PAN, rate specified or 20%, whichever higher needs to be deducted. So for 194 IB, it is 5%, which is less than 20%. So the rate becomes 20%. 206AB is non-filing of return for last two assessment year. In that case also, the rule is rate specified twice of that rate or 5%, whichever is higher. So you take 10%. We have a separate slide for this. So I'll not explain much more in this. Yes, we have a separate TAN. So as I told you, TAN is for per state. So for each state, you have a TAN. Each state, you will pay TDS. Each state, you will file TDS return. And all this will go to the credit of the PAN that you are disclosing in the return. So that's all about it. So we'll just have this one section alone and then take a break. So 194 IC is also for properties, which is under specified agreement, specified under section 45(5)(a). Yeah, it is for any person who's a payer, whatever is being paid to a resident, as far as purpose goes, whatever the purpose is, basically, I have a property, I'm giving it to a builder, saying that you demolish it, you build own apartments, you sell it to government. So this is an agreement. You would have already seen this in capital gain. So if there is any specified arrangement, then for that agreement, credit or payment, whichever earlier, the rate will be 10%. So what is specified agreement? It is basically registered agreement with the person owning land. So a person who's owning a land or a building or both agrees, saying that I'm not selling the land, but I'm allowing you to constructing a real estate project on such land or building or both. Now on this case, whatever consideration is paid for that project will have to be deducted at 10%. So TDS at 10%. So it can be part of consideration in cash or in kind. So what happens is, so for this 194 IC, let's say I have a land of, let's say, 2 ground. I call a builder, let's say Casa Infra. Now I say I request you build apartment. So CASA says CASA will build apartment in this 2 ground. We'll keep him as A. A will not sell. A will not sell land to CASA. It's only a work given. It's only a work given. So A will only ask CASA to build apartment in that land, and CASA will sell it to CASA will sell those property apartment to public. So I can go and buy. So someone can come and buy the property that is being built by CASA Infra. So now land will be transferred by A to this. This is what you would have studied in capital gain. So for this specified agreement discussed in 45 clause 5A, TDS is deductible. So whatever CASA is paying cash plus property. Let's say CASA says at the end of the project, I'll give you 3 flats. I'll give you 3 flats plus 40 lakhs cash. So this 3 property value plus 40 lakhs is what is the consideration here. Is what is called as consideration here, and TDS will be deducted at 10% on this. So that is 194 IC. So after a short break, we'll discuss this 194J. We'll discuss 194J. So we'll meet after 10 minutes, probably around 8:30. Okay. So welcome back. We'll start with the next section of 194J. 194J is for professional or technical services. Similar to many other sections, the payer is any person who are other than the individual or HUF who does not fall under the turnover category. And the payee is any resident. The payee is any resident. So it's similar to 194C, H and all sections that we are talking about. The purpose is what is critical here. It talks about list of various items. It talks of professional under section 44AA. 44AA specifies various sections that has your engineering, accounting, your legal services, medical services. All these are called as professional services by under section 44AA. Then you have technical services. Technical services refers to management, technical, and consultancy. Okay, so this is called MTC. So MTC is the technical services. Then the next one, BA, is called payment to directors. It includes remuneration, commission, fees, etc. And the next one is royalty. Royalty is typically the rights you get to use a particular invention or something, which you get right to use such particular thing. And then last one is non-compete fees. Non-compete fees is something would have been covered in your profit and gains of business or profession, which is discussed in section 28, clause 5A. What exactly it is? Let's say there is a person who's distributor of Pepsi drinks. Now, this Pepsi drinks distributor says, I wanted to quit the business. Now, Pepsi says, since you're quitting the business, I have a clause which says, I'll pay you this much, but you're not supposed to do any other business for the next 3 years. So if a particular payment is being made for not doing a particular activity relating to competition. That is why it's called as non-compete. So you're not going to compete in a similar business or a similar environment. So if a fees is paid for that, that is also classified as professional technical services. So when should you deduct? Credit or payment, whichever is earlier. What is the rate? If it is fee for technical services, that is FTS, fee for technical services, not being professional or royalty. So other than professional or royalty, it is 2%. So typically it is, we'll keep it as what? B, BA, and D. So for all these things, B, BA, and D, it is 2%. For other cases, that is your A and C. For A and C, it is 10%. So whatever is called as professional or whatever is called as royalty is deductible at 10%. For other things, that is management, technical, and consultancy, called as technical services. Other things like your payment to directors and non-compete fees is tax deductible at 2%. As far as the limit goes, for director, there is no limit. That is, from rupee 1, tax is deductible for director fees. For everything else, it is 30,000 in a year. 30,000 in a year for each clause, which means if professional services for clause B, it is 30,000. For clause C, it is 30,000. For clause D, it is 30,000. For clause A, it is 30,000. So for each clause, it is 30,000. So for the same person, if you are rendering, let's say you're rendering a professional services, you're also rendering a technical services, it is 30,000 each. So that is how you differentiate. So it is 30,000 for each clause other than this fee for director. For fee for director, it is taxable from rupee 1. So that is the limit. So it's different from all other sections. The limit what you are seeing is slightly different from all other sections. It is for each clause in the section, excluding the payment for directors alone. So moving on, if you want to understand the exclusions, it is basically professional services for personal purposes. So if it is personal reasons, similar to what we discussed in 194C, it is not applicable. Payments for software, where software is acquired in subsequent transfer without modification. Tax has been deducted under section 194J or 194I. transferee obtains a declarations and reports with PAN. So it is typically like your software is acquired in subsequent transfer without modification. Let's take, for example, you have Office 365. Okay, Office 365. Microsoft sells it to a distributor. Distributor sells it to me. Now, what am I saying? The rule says if you are actually acquiring a software in subsequent transfer without modification, tax has been deducted under 194J or 195 on any previous transfer, then it is not applicable. So the point here is, this is redistribution. This is what you call a subsequent transfer. So the provision says, if this transaction has undergone 194J, then TDS is not applicable in this transfer. So you have already deducted TDS and there is no modification in this particular thing, subsequent transfer where there is no modification. No modification on this particular Office 365. Whatever it is, I'm using it. Whatever Excel Microsoft has created, I'm using it. Whatever PowerPoint Microsoft has created, I'm using it. The distributor in between from whom I got has not made any modification. In that case, 194J is not applicable. So that's what is another thing. And specific inclusion. Third-party administrator. If some of you have actually gone to hospitals and other things and probably claiming insurance, there will be a person called as TPA in the hospital. So they will be the one who's coordinating between you and the hospital. You provide documents, everything to this TPA. TPA will coordinate with the hospital, help you in settling the claim to the hospital. So this concept of TPA is considered to be included in 194J, which will be applicable at 2%. Because it is a general consultancy. It will fall under this MTC, which we are talking, Management, Technical and Consultancy Services. So it will be a tax deductible at 2%. And when you say professional services under section 44AA, there have been some additional clauses which has been represented. They are authorized representative. In income tax, if as a chartered accountant, we are going and representing, we are called as authorized representative. Forget being a chartered accountant. You can even be a BCom graduate being a representative. So BCom graduate representing before the income tax department will be called as a professional under section this as per the circular. A company secretary, a film artist, event manager and anchor, sports person or columnist, umpires and referees, commentators, coaches and trainers, team physician and psychotherapist. Remember this word umpire and referees. Okay. So umpires and referees are professions according to this 194J. But in section 194E, where we spent sports person, that does not include umpire. So there, umpire is excluded. But in this section 194J, umpires are included or categorized as professional services. Coaches and trainers, team physician, physiotherapist. So this just to give a comparison with 194E. So as I told you, professional services includes authorized representative and company secretary, film artist, event manager and anchor, sports person or columnist, umpires and referees. All of them are categorized as professionals. So what will be the rate for these people? For these people, it will be 10% because they are categorized as profession. So that is what is provided in this particular section. And so with that, we conclude 194J. So we'll move on to the next section, 194K. So it is basically for income in respect of units. So we saw dividend, right? 194 dividend. So similarly, 194K is for income from mutual fund. When you receive from mutual fund, it is called income because it is not actually dividend as far as mutual fund is concerned. What you get from mutual fund is income. So whatever is the income other than the sale of mutual fund is covered in capital gain. So it is excluded here. Whatever is basically a person who's receiving any income from mutual funds. such income will be taxable at 10% and it is not applicable if that income is less than 5,000. So similar to your dividend provision, so where we discussed in 194, so similar to dividend, if there is an income received from mutual fund, it is tax deductible under 194K at 10% if the amount exceeds 5,000. So that is 194K. And then you have 194LA. We spoke about compulsory acquisition. So whatever compulsory acquisition you are getting enhanced compensation or compensation for compulsory acquisition, tax will be deductible. So when a person was compulsory acquired, the government or any other person is compulsory acquiring the property, the person who is acquiring the property will deduct 10% at the time of payment, and it is not applicable if it is up to 2.5 lakhs. And similarly, specific exclusion in respect of any award or agreement which has been exempted under Section 96 of the Right to Fair Compensation Rehabilitation. So this compensation is covered under this Right to Compensation Act. Then that amount is excluded from this. So whatever you're saying is only on the compulsory acquisition amount, excluding the amount treated as right to fair compensation. So that will be classified under section 10%. So compensation is what is given first. So when first agreed, the amount is paid. Then subsequently, if the assessee is not okay with the amount, he wants more amount, he can file a petition and get additional amount in accordance with the market value. So for that enhanced compensation also, this 194LA is applicable. So 194LA is for compulsory acquisition of properties where tax is deductible at 10% when the such amount is more than 2,50,000. Next is 194M. 194M is basically for 194C, 194H, 194J. So not covered. If a particular transaction is not covered for individuals and HUF, so persons who are not covered there come under this. So this is like 194I versus 194IB, right? So same way. 194IE is for any person, including individuals or HUF, whose turnover is more than 1 crore in business or 50 lakhs in case of profession. 194IB is for other persons, right? Other person paying rental. Similarly, 194M is for other persons who are not covered under 194C, H and J, who are not covered. So that is the purpose. So any person that is individual or HUF, it is only for individuals or HUF paying to a resident, where a credit or payment, whichever is earlier, you deduct 5%. You deduct 5% when the income, when the payment exceeds 50 lakhs. So when the payment in a year exceeds 50 lakhs. So for this also, you are not required to obtain TAN, because as we said, it is purely for personal purposes only. It is for not for anything else. So this payment, whatever we are talking, is what is called as 194M. So as I told you, it is not applicable. It is not applicable for this, it is not applicable for persons who are already covered under 194C, H and J. It is only for rest of the persons. So now we will go to an exercise problem relating to this to understand this provision better. So there is a person called Ganesh. So Ganesh is typically what is an individual. So this Ganesh is basically is an individual carrying on retail business with a turnover of 2.5 crores. So he is having a turnover of 2.5 crores. So he has entered into first transaction of contract payment for repair of residential house. So he is actually making a payment of 5 lakhs only. So what happens? 194C is not attracted because it is residential house. So for 194C, it is personal, hence not covered. For 194M, it is what? Less than 50 lakhs. For 194M, it is less than 50 lakhs. So TDS is not applicable on this category. Payment of commission for business purposes. So if it's business purpose, since its turnover is more than 1 crore, is covered under 194H. Is covered under 194H. So this 194H, he will be deducting what? 5% on this 80,000. So this 5% and 80,000 will be TDS under section 194H. Next is Rajesh. He has 95 lakhs. So which means he doesn't meet the condition of individuals in 194C, H and J. Contract payment for residential house. So there is total contract payment. So how much is the contract payment? 20 plus 15, 35 plus 20, 55 lakhs. So since it is more than 55 lakhs, on this 55 lakhs, he has to pay tax of how much? So we said the tax rate of 5%, right? So he has to pay 55 lakhs into 5%. So that will be the TDS as far as this. Since his turnover does not exceed 1 crore, he is classified under this particular classification. So on 55 lakhs, 5% is deducted under section 194M. So this is applicable under 194M. Next is Satish, a salaried individual. Since he is a salaried individual, of course, it is 194M. Since it is above 51 lakhs, you pay 51 lakhs into 5% for buying a residential house. So 194M does not restrict to personal use and all. Even if it is personal use, you are allowed to deduct. Dheeraj, a pensioner. So again, 194M is applicable, but since it is less than 50 lakhs, it is not tax deductible, right? It is not tax deductible. So for every section, we need to see whether the other portion is also applicable. For example, here, 194H is not applicable. Here, 194C is not applicable. So the first criteria, first condition you will have to see for 194M is whether TDS provision will apply under 194C, 194H, 194J. If not, only then we'll have to apply 194M. So when we are writing, we'll have to first write the applicability of section 194C, H, J. If not, we'll have to discuss about the provisions of this 194M. So I'll answer some of the questions till this 194M and then proceed. Pandava, why do we restrict 20%, 55,000 on this rental that we are talking? When no PAN is available, it is restricted to 1 month rental. It is restricted to 1 month rental. 1 month rent was 55,000. That is why even when the TDS was 1,10,000, we restricted it to 55,000. Can you explain 194K? Yeah, so 194K is exactly similar to dividend. Whenever your income of dividend is distributed, it is tax deductible under 194. Similarly, if it is mutual fund, it is deductible under 194K. So you can equate 194D and 194K. So whatever TDS is being obtained, TDS is deducted for mutual fund comes under 184K. So any payment from mutual fund other than sale of mutual fund, covered under capital gain is applied here, right? So that is 194K. So with this, we'll move on to the next section of 194N, which is on cash withdrawals. So the provision says whenever the cash is withdrawn from a bank, cooperative bank or post office bank, and bank is paying. So I am withdrawing. So bank will pay to, let's say, A. So when bank is paying to A, at the time of payment, TDS under section 194N will be applicable. When there are two classifications. The first classification is if return is not furnished for 3 years immediately preceding the previous year. So currently we are in what? Previous year 21-22. So the return should have been filed for the previous 3 years for which due date is expired. So due date is expired. So for 3 years for which due date is typically expired. So this due date, whatever we are talking about, is the due date which is specified under section 139. For example, let's take previous year 2021. Due date, the belated due date, the actual due date for filing was what? 15th January 22, right? Let's say that was the due date. So till the date, whatever you are talking, this due date, whatever we are talking, is what is applicable. So the due date specified under section 139 is what applicable. So the actual due date. So if it is extended, the extended due date. So if the return has not been filed, then the provision is applicable from 20 lakhs itself. From 20 lakhs to 1 crore, it is 2%. So when you say you have withdrawn 30 lakhs, TDS is applicable on TDS on 10 lakhs. So it is on excess of 20 lakhs. So TDS is applicable on the excess. So up to 1 crore, it is 2%. Above 1 crore, it is 5%. If the returns are actually furnished for all the three immediately preceding previous year, then on the amount exceeding 1 crore, if you have actually withdrawn 1.3 crores, TDS is applicable on TDS on 30 lakhs. Okay, so that's how the provision goes. It is exceeding 1 crore. So the limit of 1 crore or 20 lakhs is exceeding. So it could be limit of 1 crore or 20 lakhs. And whenever the amount withdrawn is by the government or a bank or an ATM operator or anyone specified here, then this provision is not applicable. That is, you need not deduct TDS. So these are the exclusions. That is government, bank, white label ATM operator. What do you mean by white label ATM operator? The person who is actually going and funding money into the ATM boxes and other things. So they are security agencies. So those white label ATM operator are not covered. Such other person, cash replenishment agency, similar to this ATM operator only, and agriculture produce market committee. So they are also not covered. Authorized dealer and full-fledged money managers. So who are dealing in foreign currencies. Who are dealing in foreign currencies are also not covered. So typically that is a provision. So to just repeat, for 194N, if a person filed 3 years, withdraw 1.3 crores, TDS is on 30 lakhs. That is 1 crore 30 lakhs minus 1 crore. So only on that TDS is applicable. If not, if it is not filed for 3 years, then if you withdraw 30 lakhs, TDS will be on 10 lakhs. That is 30 lakhs minus 20 lakhs. That is the base limit. So for this, it will be at 2%. Here, for the till up to this 1 lakh, here also it will be 2%. If it crossing 1 crore, if it is crossing 1 crore in this category, then it becomes 5%. So that's the provision of 194N. The next provision is 194Q. This provision is actually applicable, 194O. This is applicable from 1st October 2020. So the payer is basically an e-commerce operator. The payer is actually an e-commerce operator. Who's an e-commerce operator? Things like Amazon, Flipkart, they're all e-commerce operator. What do? They own a website, they manage the website, they operate the website. So they are called e-commerce operators. So someone like Amazon, Flipkart, Zomato, right? So all of them are e-commerce operators. Now, who is an e-commerce participant? E-commerce participant is a resident. So whosoever is actually participating in this e-commerce operator. So what exactly is the e-commerce participant? A resident for whom this e-commerce operator is facilitating, which means seller in e-commerce sites. So the seller in Amazon, seller in Flipkart are all called e-commerce participant. So if there is any sale of goods or provision of services facilitated through the digital electronic platform. When you say services, things like your urban club, right? So they all facilitate services. Amazon, Flipkart facilitate goods, right? So that's what you're calling as facilitating. Credit or payment, whichever is earlier. So whenever this e-commerce operator is paying this e-commerce participant, the seller, then credit or payment, whichever is earlier. So what is the 1% on gross amount of such sale or service or both? So whatever the amount that payer is paying, the e-commerce operator is paying to the e-commerce participant, at the time of payment, 1% of gross amount should be deducted. Aggregate does not exceed 5 lakhs. So this provision is not applicable if aggregate in the year does not exceed 5 lakhs and the individual HUF has furnished the PAN. So that is what is there. So TDS has been deducted under any other section. If TDS is applicable for the same transaction under any other section, then it will not come here. Sometimes what happens is recipient directly pays to participant. Let's say generally I buy a product. I buy a product from Amazon. The seller is, let's say, C. Now I pay to Amazon. Amazon will pay to C. Okay, so this is how this works. Now, this transaction is what we are calling it as 194O. Now the provision says, for the same transaction, you are not paying to Amazon, you are directly paying to C. Then also the provision says apply 194 because it will be a deemed credit because it is direct payment by recipient to participant. The recipient is directly paying to the participant. So that is what we are calling it as e-commerce transaction under section 194O. So with that, probably we have covered all the TDS sections. The last one is this 194P. 194P is applicable from 1st April 2021. So if a person is 75 years or more, he is only having pension income and interest income from the same bank. So if I'm receiving pension income from State Bank of India, my interest income also should be from State Bank of India and must furnish a declaration to the bank saying, I am more than 75 years old. My only income is pension and interest income in your bank. So I need to declare it. So if to such persons, a bank is paying interest, then on that amount, whatever amount you're talking about, the specific senior citizen shall not require to file the return of income. So we'll just assume here, there is the State Bank of India paying to Raju, who's 76 years. He has pension and interest. Okay. Now, when paying to Raju of this pension and interest, SBI shall deduct TDS for the whole income. So that for that they'll deduct TDS. Like your section 192. What do you do in 192? Actual rates. You calculate the total income taxable. On that, you calculate the TDS, then deduct, right? So similarly for this also, you calculate the total income. So you take whatever is the pension income less standard deduction, then you add interest income. So you get your total income less 6A, chapter 6A deductions, net total income. On this you deduct TDS. So the bank under section 194P will deduct TDS under this section, which means all my taxes are deducted. I need not even pay rupees 1 rupee extra, and even 1 rupee need not be refunded to me. So the exact tax amount is actually deducted. So this is what you're calling as this 194P, where you say bank shall deduct the actual tax of a specified senior citizen if the specified senior citizen is receiving only pension income and interest income from the same bank. So that is 194P. We'll see a problem to understand this. So Mr. Sharma is a resident of 77 years. He gets pension of 52,000 per month. The same is credited to savings bank account in State Bank of India. In addition, he gets interest at 8% on fixed deposit of 20 lakh with the said bank. Out of the deposit, 2 lakh is 5-year term deposit. Confusing or extra information? What is it? It is extra information because 5-year term deposit is eligible as a deduction under section 80C. Interest on savings bank credited to savings account, 9,500. Confusing or additional information? It is additional information because for savings account also you have deductions. So deductions are now applicable under section 80C and 80TTB. 80C for your 5-year term deposit, 80TTB for your interest income. So that is what you are including. So from the above facts, we need to compute the total income and tax liability, assuming that he has not opted 115 BAC. So that is the income that we are talking about. So what is the first thing that we need to do? We need to compute particulars amount. So we need to compute the actual tax. So first is pension. How much is pension? 52,000 per month. So it is 52 into 12. How much is it? 6 lakh plus 24,000. So 6 lakh 24,000 less salary is eligible for standard deduction. So standard deduction under section what? 16. How much? 50,000. So 5 lakh 74,000. 5 lakh 74,000 is your salary income. Then what you have? You have interest income. Income from other sources. Interest from what? The 20 lakhs deposit, right? So you have a deposit of 20 lakhs at 8%. So 20 lakhs into 8%. That is how much? 1,60,000. Then you have interest savings bank account, right? That is 9,500. So you have 1,69,500. So your gross total income is 7,43,500. 7,43,500. No less. ATC, the 5-year deposit was how much? 5-year deposit is 2 lakhs. So 5-year deposit is 2 lakhs. And then you have 80 TTB, that is 50,000, because the total is 169,500 restricted to 50,000, right? So the 1,69,500, but it's restricted to 50,000. So this 50,000 is also considered. So you take the overall exemption of 2,50,000. So what is your net total income? Net total income is how much? It is 496,500, is it? 496,500, correct? Sorry, which is it? 743. Okay. This ATC is maximum is how much? Only 1,50,000. Maximum is only 1,50,000. So I'm eligible for only 2 lakhs of deduction. So which means 5,43,500 will be there. So it is restricted to 1.5 lakhs. So totally 2 lakhs is what I'm getting. So this 543,500 is my income. So if you have to actually calculate tax on this 543,500, what will be there? For first 5 lakhs, that is will be 10,000 plus 43,500 into 20%. That will be 8,700. So 18,700 will be my tax, right? So 18,700 will be my tax. I'll have to add this at 4%. So 18,700 into 4% will be 18,700 into 4%, which will be 748. So which will be 19,448, right? So 19,448 is my income. So now the bank, what would be the amount of tax deductible at source by SCA, assuming the same specified bank? Is Mr. Sharma required to file his return of income? So SBA will deduct 19,448 only. So they'll deduct 19,448 only. Sharma need not file return. Need not file tax return. So that is the provision. So whatever we have discussed now is basically he need not file the tax return. Would your answer be different if the fixed deposit of 20 lakhs was Canara Bank? What happens if it's Canara Bank? It's two different banks, so return has to be filed. So the 194P says both the pension income and interest income should be from the same bank. If it is from a different bank, then return has to be filed. So the last section of TDS is 194Q, which is applicable from 1st July 2021. It is basically applicable to any person who's buying goods. Okay, it is buying goods. So the buyer must have turnover of more than 10 crore during the immediately preceding previous year. So for such person only this provision is applicable. So when they are paying to seller at the time of purchase goods, credit or payment, whichever is earlier. Now we have a new rate called 0.1 percentage. So we have a new rate 0.1 percentage. Earlier you said 1, 2, 5, 10. So now we have another rate which is 0.1 percentage. The limit here is 50 lakhs. The limit here is 50 lakhs. So which is typically till 50 lakhs, you need not the applicable. So in a year, if the payment is less than 50 lakhs, this provision is not applicable. What are the exclusions? If the tax is deductible under any other provisions of that, if it's 194C, then you need not deduct it under 194Q. And tax is collectible under section 206C. So if the TCS is collected on the same transaction, other than this 1H, so what is 1H is basically sale of goods. If tax is collected under section sale of goods, that is 1H. So if TCS is collectible, then it is not applicable. Central government may notify persons who are not buyer, something like your non-resident buyer. Non-resident buyer might not fall into this. So typically, notify persons who would not be a buyer. And if it must be deducted in 194Q. So I'll explain you in a different manner. So we'll take an example of for this particular situation, whatever is the provision, we'll understand. So the provision says, let's say Alpha Limited is selling goods to Beta Limited. Okay, Alpha is selling to Beta Limited. Now this whatever is Alpha is selling is typically let's say there's Alpha's turnover is 15 crores. Okay, Beta is selling goods. Now Beta's selling goods for, let's say, for 1 crore. Okay, whatever is being sold by Beta Limited is 1 crore. So the 194Q says Beta deduct TDS on, we'll keep it as 2 crores. Okay, deduct TDS on 2 crore minus 0.5 crore, that is 50 lakhs, 0.5 crore. So TDS on the excess amount above 50 lakhs. So what will be the amount? It will be 1.5 crore, right? 1.5 crore. So we'll deduct TDS at 0.1 percentage into 1.5 crore. This is what Beta has to deduct. Before this provision, there was a tax collected at sources provision under section 206C 1H, where it said Alpha Limited will keep their turnover also as 15 crore. Alpha Limited will deduct TDS on this 1.5 crore. It's not TDS, right? It is TCS. TCS on 1.5 crore at 0.1 percentage. So this was the existing provision. So what this provision says is, if tax is collectible under section 206C for any other reason other than this 1H, then it is excluded. So this provision is not applicable. Similarly, if both the sections are applicable till a point in time, because this is applicable in 1st July, that was applicable from 1st October. So this is from 1st July 21. This is from 1st October 2020. So for a short period, it's like both the provision is applicable. So if both the provisions are applicable, then what overtakes is 194Q. So 194Q takes preference if both are applicable. If both the provisions are applicable, 194Q takes the preference. And this 206C is receipt basis. So this is credit or payment, right? This is where the difference comes. Your credit happens after July 21, but receipt has happened before July 21. So probably just briefly understand this provision. So this 194Q is whenever goods are purchased, any person being a buyer. In our case, we were talking about beta. So beta's turnover is more than 10 crore. Then 194Q applies on such purchases. If it is more than 50 lakhs, on that exceeding that limit, 0.1% is deducted. Whereas in 206C clause 1H, it is selling. When the seller's turnover greater than 10 crore collects from buyer. So when the buyer is paying to seller, when the seller is receiving, tax is collected at sources. This is 194Q, right? So that is what the provision says. So with that, all the TDS provisions are done. Why are there so many TDS provisions? Yes, of course, I don't have an option or I don't have an answer to this. Typically, probably we keep it this manner. For each category of income, for each nature of income, government tries to have this TDS concept so that as much as tax is collected before the year itself, during the year itself, as much as tax is collected. So to have that principle, government makes sure that there are various provisions for each of the income. Whatever you are calling as income from other source, business or profession, whatever it is there. So that is why there are so many provisions. Probably I would say you remember the key sections which are relevant for your exams at this point in time. Over a period out of your experience, you'll start remembering all the sections numbers. Madhavi, pension should only be from SBI or not? No, definitely not. It could be any bank, but only rule is if pension is from particular bank, interest should also be from the same bank. That is the only rule. Yeah, Jamil Sandeep, by mistake, I first quoted as 2 lakh. It is actually 1.5 lakhs only. So yeah, many of you have pointed that ATC. Good that you remembered that 1.5 lakhs when I didn't remember it. So good that you all remember that the limit of ATC is 1.5 lakhs. So I've actually corrected it at that point in time itself. So that's what it is. So typically, if you ask me how to remember and all these concepts, as I was telling you for various things like your deductions and other things, try to link it, try to compare. So two things that will help you remember is link and compare. So when you compare 194C with another section, so for example, what you have 194M, you try to link and know, okay, this is 194C, this is 194M. So similarly, you have what? You have 194H, 194D, 194G for commissions, right? So when you are actually linking the nature and the provisions, probably you will try to remember it easily. So this is what is there. So for exam purpose, if you ask me, it is personally my own thing. The important sections could be 194C, or probably you can add 194A, 194C will be the most important section. 194H, 194J will also be important. And then any recent amendments, newly introduced sections will be important. So this is what things like 194O and all, I guess it should be more important in your final. 194O or testing you in 194Q and all could typically be your final level questions. So if you ask me, I would say, yeah, 194I, 194IB. So 194M, so that's it. So these are the sections I would say is actually important for your exam. So please make sure that you know this profile so very well. Other than that, it's okay. It is okay you not knowing also. 194Q explanation, I'll probably come back to it when I'm discussing the 206.1H. So for time being, we'll hold on to 194Q. It is for this transaction which I explained is what this 194Q is about. So 194Q in short is for purchase of goods. Purchase of goods. So when you are purchasing goods, whatever is being purchased, if that amount exceeds 50 lakhs, TDS must be deducted at 0.1%. So that's what it is about. So that's how it is 194Q plays. So to summarize again for 194Q alone, seller, buyer, okay. Buyer's turnover is greater than 10 crore. So this is the eligible person. So this person is eligible. He pays to seller for what? For purchase of goods. For purchase of goods. So this transaction is covered under 194Q. For this purchase of goods, payments exceeding 50 lakhs. Remember the word exceeding 50 lakhs because TDS itself is applicable only on the amount exceeding 50 lakhs. It is deductible at 0.1%. It is not applicable if TDS is applicable under other section. Applicable under other sections, okay, then it's not applicable. And then you have what? TDS is applicable under other section. TCS is applicable under section 206C other than 1H. What is 1H? TCS on sale of goods. So this is what 194Q is about. So in my example, what did they say? Alpha sells to beta. Sells, right? For how much? Beta's turnover is 15 crores. How much is the selling? 2 crores in a year. So now beta will deduct TDS at 0.1% on 1.5 crores, which is nothing but 2 crore minus 50 lakhs. 50 lakhs, right? So if you remove this, it is 1.5 crore. TDS at 0.1% is deducted on 1.5 crores. So that is 194Q. The reverse is 206C1H. We'll come to 206.1H a little later. So that is 194Q. So I'll move on to the next provisions. I'll just roughly go through all these provisions. These are just for your understanding only. So 195A says, if someone says, I cannot bear the TDS, it is your duty, I'll have to gross up. What is gross up? Let's assume my invoice is 100. I need to deduct TDS of 10. So technically, I'll have to pay 90 to the person, right? But the owner says, I cannot bear the 10 and all, it is your duty. Then what you do is, you gross up. You treat this as the invoice amount. So which means you treat it as, you identify how much is your TDS amount. So it will typically be like 111 minus 111 will be 100, right? So now this is what you, so if you're applying 10% on this, it comes. So you gross up, which means you make this 100 as net amount. So you bring the 100 as net amount. So basically TDS is borne by me. So I do a mathematical calculation to arrive at. So please don't confuse with this concept of gross up. Gross up is nothing but gross up actually refers to this net amount will be considered as the after tax amount. So I do a backward to make that amount. So that is what is there. So this is what the gross up portion is. So please don't ask me questions on gross up because it is not at all relevant, but for theoretical purposes, just understand. When it comes to this government, reserve bank, or certain corporations, it is not applicable. That is, TDS provisions are not applicable when there is interest or dividend or any income payable to government, RBI, or mutual fund specified under section 1023D. So if a payment is being made to them, no TDS. So if a payment is being made to government or RBI or mutual fund under 1023D, then TDS provisions relating to interest, dividend, or any other income is not applicable. So that's the provision. So it is not applicable. TDS provisions, whatever we saw now, if the person to whom you are going to pay is government or a Reserve Bank of India. Let's say rent is 10%, okay? Rent is 10%. So this rent is actually 10%. Let's say I'm actually receiving rent of 40,000 from a company. So my total income will be 4,80,000 in a year. Now, I'm actually not supposed, if that is my only income, at the end of the year when I'm filing my return of income, my total tax is zero. My total tax is nil in this case. But TDS would have been 4,000 per month, or 48,000 would have deducted. So I'll be claiming a refund of 48,000. So I'll have to file my return, claim my refund, everything is there, right? So what government says is, if you think that TDS rate is higher, what is applicable to you will be a much lower rate. Apply to the income tax officer requesting for a lower deduction or no deduction. So in this case, what it is? No deduction. It could also be lower deduction. So lower deduction or non-deduction. So I apply to the officer and say, see, this is what my income is. I would not be paying taxes at all. Why do you ask someone unnecessarily deduct TDS for me? So don't ask them to deduct TDS. See, these are my income. This will be my tax. So don't deduct TDS. So this can be applied, and an income tax officer shall grant a lower deduction or no deduction TDS for all these sections. For all these sections, that can happen. 197A is typically for bank interest and other things. Bank interest, dividend, and other things. There are two forms, 15G and 15H. H is for senior citizen, G is for others, okay? If my income itself is less than 5 lakhs, I will not be subject to tax at all. For certain sections, I can give a declaration, a self-declaration to the concerned person who is supposed to pay me, saying that, see, my income is less than the taxable limit. Similar to what we did here. Similar to what we saw here, 197, you apply to IT officer. 197A, you declare to responsible person. That is, responsible person, you mean by person who is supposed to deduct TDS. So the payer, right? So you disclose it to, you declare it to the payer. So that is 197A. So 197 is applying as an application. 197A is a declaration. Both are for same purpose. Only difference is it is applied to the income tax officer. This is declared to the payer. But here it is only for no deduction. It is not for lower deduction. But 197 is also for lower deduction. So typically, I have option to reduce my TDS rate if my income itself is lower than the actual limit. So that's the reason why here. So you can actually say that my income will be lesser than the basic exemption limit of 2.5 lakhs. So don't deduct TDS for me. So this is only applicable when my income is less than the basic exemption limit. If my rental is only 20,000 per month, in a year I'm going to collect 2.4 lakhs. So I can say my income is less than the basic exemption limit. So do not deduct TDS. So that's what is there. Other sections of TDS is 198 says whatever income on which TDS is deducted will be called as your income. So if 40,000 into 10%, 4,000 is deducted, 40,000 is your income. So that is what it is. Sum deducted shall be deemed to be the income. So whatever is deducted as TDS is also your income. So when you are being paid you will be paid 36,000, right? But your income is actually 40,000. So whatever is the actual income should be considered and not after TDS. So TDS is also payment of taxes. That's why you're getting it as credit in later point in time. So now the question comes, when should I pay? I'm deducting paying, reporting. Okay, this is the structure of TDS. So deducting we saw from section 192 to 194Q. Now, when do you pay? Basically, it differs for government and other organizations. For government, it is 7 days. 7 days from the end of the month. So if it is February, before 7th March. If it is January, before 7th February. So that is 7th is the critical date for month. Okay. Without challan, I'll not get into that. Basically, when two government organizations are dealing, they do a book entry rather than actually paying. So that we'll stop it there. What about other organizations? This is only important. So this is only important here. So for certain persons, for 192, 194A, 194T, and 194H, you can get approval and pay it quarterly. So for June, it is 7th July. For September, it is 7th October. For December, it is 7th January. For March alone, it is 30th April. So you're giving more time because you will have what? You will have provisions, adjustment entries, all those things. So for March alone, you're given some extra time. For every other section, for 194 IA, that is without no TAN, based on PAN, for what 194 IA is immovable property. Transfer of immovable property more than 50 lakhs. So within 30 days from end of the month. So if I'm actually selling it on, let's say, today date is 29th March 22. The end of the month is 31st March 2022. I'll have to pay before 30th April 22. That becomes my due date for paying 194 IA. Same for 194 IB. What is IB? Rent greater than 50K. So for that, it is again 30 days from the end of the month. So for this, it is 26 QB. For this, it is 26 QC. Because for both these sections, it is no TAN. You pay with PAN. You pay with PAN for both 194 IA and 194 IB. For every other case, for April to February, it is 7 days. So if it is, let's say, TDS in May 21, it has to be paid before 7th of June 21. Correct? So that is how it is made. Only for March, it is April 30th. So if it is March 21, it is 30th April 2021. So that is the due date. So this is what you need to understand for TDS payments. So the three process of TDS is what? Deducting, paying. So we saw deduction first. Now we saw payment. Now we will see reporting. So what is reporting? As far as reporting goes, you need to file salary in 24Q, non-resident in 27Q, domestic payments in 26Q. So these are the things that is applicable for reporting. So this is how you report. You need to file a quarterly. For every quarter, you need to file a return before the next month end. That is 31st July, 31st October, 31st January, 31st May of immediately following financial year. Like if EP, it is IFI. We saw EP, right? Immediately preceding previous year. For IFI, it is immediately following financial year. Okay, that is IFI. So IFI says that is for March alone, for the period Jan to March quarter, you'll have to file before 31st May. So if it is March 22, you'll have to file before 31st May 22. This is previous year 21-22. This is previous year 22-23. That is why we are saying immediately following the financial year. So for previous year 21-22, for the quarter 4, that is January to March, we need to file it before 31st May of 22. So that's what we are calling it as IFI. 31st May of the IFI of the period in which TDS was deducted. And for every deductions, remember in our example, we said how TDS gets flowed, right? We said how it's flown to B, C, and D through TDS credit. So this credit happens through something called Form 16A or 16. So 16A is for non-salary, 16 is for salary. So by giving this form, through this form, you transfer the credit, whatever you have paid. A paid tax for B, C, D, it gives credit to them. So that certificate should be given within 15 days after the due date of return filing. So quarter, month end is return filing, 15 days you'll have to give the return. So these are the due dates and templates for whatever it is. So that's all about it. So now we'll move on to the consequences. So basically, TDS, once return is filed, once a return is filed, so we said deduct, pay, report. Okay. After all this is done, TDS, that is IT department, analyzes the return for any arithmetical error, any incorrect claim. For example, if saying 194C, I have applied, or I'll take 194J, I have applied 5%, which is actually 10%. So this is incorrect claim, correct? This is incorrect claim. So because I should have actually deducted 10%. So for these incorrect claim and any arithmetical error, I will analyze. That is, the department will analyze and calculate any interest that needs to be paid. And if there is any delay in return filed, it is 200 per day is the late fee. So if there is any late filing, so instead of filing on 31st July, I am filing it on 15th August. For 15 days, I am applicable of 15,000. So 3,000 will be the late fee. So this late fee is applied, and I'll finally determine any amount payable or refund dueable. This intimation, this analysis will be shared with the assessee. So if there is any refund, it shall be granted also. So that is the analysis that is happening. So we said deduct, pay, report, and then IT department analyze for arithmetical error, incorrect claim. Okay. So you add interest plus fee, compute TDS. If there is any refund, you issue refund issued. So in between, you issue the intimation saying that this is what I have computed, this is what you have filed, this is what I have computed. So this intimation will be shared, and if there is any refund, that will also be issued. So this is there. Now, if there is any late payment, we said it has to be paid, right? So let's say there is a transaction. Let's take rent itself. Rent for April 2021 is 60,000. Okay. So I'll have to deduct 10% of 6,000 while paying to the owner. I'll pay 54,000, which is 60,000 minus 6,000. To government, I'll pay 6,000. Okay, this is the rule. Now, when should I pay to government? For April, I'll have to pay before 7th May 21. Correct? I'll have to pay before 7th May 21. Now, there are two scenarios. I did not deduct paid owner 60,000, or I deducted but not paid. So I have not paid the 7,000. So 6,000 to government. So there are two different interest rates. So for not deducted, TDS rate is 1%. Okay. For deducted not paid, it is 1.5% per month. Per month. So for deduction, for non-deduction, it is 1%. For deduction and paid, it is 1.5%. If you actually look at it, in this situation, the 6,000 is with this person, right? The person who's with the tenant. So he is misusing someone's fund. It's not 6,000, it's not his money. It's owner's money. I have hold it on behalf of him. I'm supposed to pay it to government. So I am actually misusing, right? I'm not using it for TDS payment. I'm just keeping it with me or using it for something else. So to penalize you more, they give you 1.5%. So for non-deduction, it is 1%. For non-payment, it is 1.5%. Why that extra 0.5%? Because you are keeping someone's fund in your hand, someone else's fund in your hand. So that is why this 1.5% is higher rate. So this is how this TDS provision is about. So now this TDS is calculated monthly, 1.5% per month. So if you're actually paying it on 7th July 21, so you will actually default. But what did we say? If that person, if the respective person return as access, then you are not assessing in default. Those are the two things. So you will be assessing in default if you have not deducted, if you have not paid, if you have deducted short payment, that is short deduction, short payment. So all three are covered. But in case if the other person, the payee, has furnished return, computed that amount, has paid the tax due, if all that has happened, then it is not applicable. So this is what assessing in default is about. We saw this in the first slide of the initial session yesterday itself. We discussed about this. So this is interest. So with that, TDS is done. We'll see one more section, that is 206AA. We said rate prescribed in the act, rate in force 20%, whichever is higher. For two sections, that is 194O and 194Q alone, you have a different rate. Instead of 20%, it is 5%. So it's rate prescribed, rates in force 5% for these two sections. For everything else, 20%. So when no PAN is furnished, this will be applicable. What is rates in force? Whatever is provided in Finance Act. So every Finance Act sometimes comes up with the rate. Rate prescribed in the Act is your TDS rate and other things. So this is like what? TDS rates. Rates in force is the actual rate applicable for that particular transaction, which is specified in the Finance Act, and then 20%. Typically, for your intermediate purpose, you can keep it as the TDS rate or 20%, whichever is higher. If it is for 194O and 194Q, it becomes what? It becomes 5% instead of 20%. So what was section specified in 194O? It was 1%, right? So 194O is 1%. So when you say 1%, 20% is a very huge amount. So from 1%, and for 194Q, it is what? It is 0.1%. So this multiplying to 20% is very huge. So to avoid that, it is restricted to 5% for these persons. So we'll take an example for plant and machinery under section 194U. TDS rate is 2%. 206AA rate would be what? Would be 20% because it is higher of whichever is higher, right? So 206AA will be 20%. In case of casual income, 194B, the TDS rate is 30%. What is the 206AA rate? Maximum rate is 20%. So whichever is higher. In this case, it is only 30%, right? So this is how it is computed. So rate or 20%, whichever is higher. So that's how you compute 206AA. We said there is one more section, 206AB, where twice the rate prescribed. So if your 194I says 10%, 206AB rate will be 20%. And there's also another rate called 5%. So whichever is higher. So if it's 194I, it will be 10% being the TDS rate, 20% being the twice rate, 5% being a cap. Okay, whichever is higher. Okay, whichever is higher. So this is for 206AB. This is to penalize persons who are not filing their income tax returns. For how many years? For 2 assessment years immediately preceding previous year. So if he's a resident, was not filed his returns for 2 assessment years immediately preceding the previous year, and his aggregate TDS plus TCS is more than 50,000 in both the years. In both the years, if it is more than 50,000, only then this provision is applicable. So let me repeat: a person who's a resident was not filed return for 2 assessment years, whose aggregate TDS and TCS aggregate is more than 50,000 in both the 2 previous years. So that is where this provision comes. Once he is a specified person, we need to see twice the rate, the actual rate in force, the rate prescribed in that. It's basically twice the rate prescribed in that, twice the rate in force, or 5%, whichever is there. So 194I says 10%, 206AB, that is twice, says 20%, and there is a cap of 5%. So whichever is higher of this will be applicable. So in this case, what will be applicable? What will be applicable is 20%. That's what it is there. For both, if both 206A, someone has not furnished PAN, which means they have not filed their return also. They have not filed their return also. If both are applicable, higher of 206A and 206AB should be applied. So that is how it actually goes. So this is what 206AB is. So 206A and 206AB is for penalizing higher TDS rate where PAN is not furnished or where return is not filed for 2 assessment year. So that is what the provision is there. So remember who the specified person is: a resident, not filed returns for 2 years, TDS, TCS for 2 years, for both the years being 50,000 or more. So that is what the provision is. So I have a few more slides. I'll just complete it so that we need to wind up this chapter for today. So I'm sorry for extending it this long because there are too many things to get covered. What type of MCQ comes? Mostly like calculating TDS. So it will be like you'll have to calculate TDS, or you need to see applicability of TDS. So that will be there. Jamil, is there any maximum cap for late fee? Yes, for 234E, the maximum cap is the actual TDS. So if your TDS or late fee, whichever is lower, is what is actually paid. For 194I, yes, the 206A is not 20. For 194I, there is no cap. 194I is only rental. So whatever we said here in 206AB, this will not be applicable because it is not the higher. The cap is basically a short amount which is being prescribed. So 5% is the general cap given. So in this case, we'll only apply 194I. Okay, so the next is advance tax. Advance tax is typically next to TDS, where you need to say taxes are paid before year end itself. So it is not applicable for a senior citizen, who is not having business or profession income. So advance tax provisions are not applicable for persons more than 60 years old and for whom profit and gains or profession, business or profession is not applicable. So it is not applicable for a resident who are more than 60 years and who does not have income from profit and gains of business or profession. And it shall be payable only when 10,000 or more. Advance tax is generally applicable if in a year your total tax should be more than 10,000. So these are the two situations where advance tax is not applicable. So if your total tax is less than 10,000, or if you are a senior citizen and you do not have business or professional income. So in that case, advance tax is not there. So when should you pay advance tax? On or before 15th June, not less than 15. So for first quarter, before 15th June, you'll have to pay 15%. For the second quarter, that is 15th September, we need to pay 45%. For the third quarter, that is 15th December, it is 75%. For the last quarter, before 15th March, you should pay 100%. So this is the limit: 15, 45, 75, 100. 15th of each quarter: June, September, December, and March. So that is what we need to pay. If you are using presumptive taxation, if you are following presumptive taxation under 44 AD or ADA, you have only one due date. One due date for advance tax. It is only 15th March. So there is no June, September, December due date. So you'll have to pay 15, 45, 75, and 100. If you are a presumptive taxation, directly you need to pay 100% before 15th March. So the main exercise in advance tax is estimation. You need to estimate your income and determine 15%, determine 45%, determine 75, and determine 100. So that is what you need to do for advance taxes. And what will be the interest if you are actually not paying these payments? So typically, if you are not filing your due date within the due date, so if your due date is July, let's assume your due date is 31st July 2022. If you are not filing within 31st July, from August, you need to pay 1% interest. So that is 234A. 234B is, we said advance tax has to be paid 100%. So 234B is applicable when you have paid less than 90% of advance tax, which is if your total tax is 200, 234B will be applicable if your tax paid till 31/3 is less than 180. Is less than 180. So if before 31st March, if you have paid less than 90%, 1% still you are paying. Let's say you are paying on 31 July 2022, you will pay for April, May, June, July. So you will pay for 4 months interest. That is 4%, 1% per month. So this is for shortfall of advance tax. Advance tax shortfall. So for this you pay this. Last one is 234C. This is for delay in payment of advance taxes. So generally, you have to pay 15%, 45, 75, 100. The provision says you should have at least paid 1236 in the first half year. So because it is only based on estimation, so government says it's okay if you are not estimating properly, it is completely okay. So the government says estimation of income for 12 and 36, you actually do it. Calculate 1% for 3 months. So typically, April, May, June, July, August, September, October, November, December, January, February, March, right? So I need to pay first installment here. If I'm not paying, I pay next installment year, next installment year, next installment year. Now, if I'm not paying in June, I pay 1%, 1%, 1%. So put together 3%. For September 1%, October 1%, November 1%. So put together 3%. For December, January, February, put together 3%. For March, 1%. So this is how you calculate this advance tax. 1% for 3 months, 1%. So this 3 months is typically like June, July, August. This 3 months is September, October, November. This is December, January, February. This is March. Because in April and May, there is no due. There is no due of advance tax. So your advance tax starts from June. So June, July, August, 1% for 3 months. September, October, November, 1% for 3 months. December, January, February, 1% for 3 months. Finally, 1% in March. So that is how advance tax is calculated. It is not applicable wherever you are not able to estimate your income. Capital gain. I will not know that I'm going to sell a share on this date, sell a building on this date. So we can ignore. Winning from lottery. These are all sudden income. You can't plan it. You can't estimate it. So for these income, first time business, this is no more applicable. So we can leave it. However, such tax must be paid subsequent installment. Let's say I sold a building. I sold a building on 30th June, right? 30th June 21. Now I did not know I'm going to sell my property. So on first quarter, I'm not. So my first installment itself will be 15th September 21. because I do not know that I'm going to sell my property. Only on 30th June, I know that I've sold my property. So my first due date for installment will be 15th September. TCS alone, I'll probably cover in the next batch, first set, and then probably take from tomorrow's session. I'll first take a short portion of TCS and then continue with this computation because of this time shortage. So if there's any question, probably I'll answer. If not, probably we'll wind up. So thank you for the session. So tomorrow we'll meet up. Just start with this TCS, a brief introduction of TCS, and then go with total your return filing requirement. So section 139 and other things. So thank you for the session.